Steve Nicholson. I'm the grain and oilseeds analyst for Rabobank Finance out of St. Louis, Missouri. We just released a report looking at the implications of the appreciation of the U.S. dollar on agriculture, and we've been talking to farmers. Of course, their first reaction is, "Oh my gosh, exports are going to fall to zero, and it's a disaster." And so, I think we kind of want to talk about that. That's a little oversimplification of the situation. And in the report, we talk about both what's causing the U.S. dollar to appreciate. How is it relative to where it's been in the past? And then we focus on kind of the three big commodities, corn, wheat, and soybeans. How will they be impacted by appreciations in the dollar? And then we look at kind of by a country situation, and we focus a lot on Brazil and soybeans, because that's really where the biggest impact will be, and what that impact will be on U.S. and Brazilian producers. And then we spend a little time in the end of the report talking about the implication of having a strong dollar, and if you're investing in overseas agriculture assets, here's your opportunity, because you have a very strong dollar. And I mean, just a good example is in Brazil. A year ago you were getting 2 reals per dollar, and now you're getting 3.5, 3.6 reals per dollar. I think, as you know, that there's a lot of folks who are, pushing U.S. dollars or U.S. equipment, used equipment overseas. It does make our process or our costs a little more expensive, or our equipment more expensive overseas. And as you well know, with the cheap dollar that we've had, you've seen a lot of imported equipment come to the United States. And frankly, as an observer of equipment and listening to ads, you just hear more and more advertising. And now I think it's going to be a little tougher for that to happen. I mean, you'll probably see more of that now, because it'll be cheaper than, the domestic equipment that we buy here. Well, I think the first thing, let's talk about the dollar, why the dollar is doing what it is. And the first reaction that I get when I talk to groups is, this is horrible, it's at an all-time high, and I would argue that that's really not the case. If you look at the dollar right now, the dollar is trading at 94, 98 area if you look at the U.S. index. And if you look at a long-term average of that index from 1980 today, and take the average of the daily closes, it's 98. So the dollar's kind of returned to its whatever's normal anymore, but sort of an average. And the last several years have really been the aberration, which is why we've seen high commodity prices and U.S. commodities being well financed. The other thing is the dollar's appreciated because investors are looking at the dollar for two things. One is a stability, economic and political stability, which is what we have in the U.S., and also the fact is that the investors are looking to the Federal Reserve saying, okay, we're going to increase interest rates, so we want to invest in the dollar because that's where the money's going to be. The impact on commodities and talking about where are we going next. We're in probably a 2 to 3 year cycle of down commodity prices, assuming normal weather and all those things that we always assume, and it's going to be tight margins for farmers. That's going to translate for equipment folks, a tough 2 or 3 years at least. We all know that the high commodity prices the last several years have been a boom to farm machinery folks, and a lot of new equipment sold. Used equipment was valuable, and now we've seen gone the other direction. So we've gone, I hate to say boom to bust, but we're kind of in the trough of that. So I think we need to see commodity prices come back up. There's always something that happens that you don't expect, a shock to the system. Probably weather is the first thing that comes to mind, and I just read something this morning about El Nino and La Nino. We've gotten a La Nina there, or El Nino is the biggest El Nino we've had since the 50s. And they said with a 70% chance, if you have a El Nino in the U.S. Corn Belt, that's about a 70% chance of above trend yields, which is kind of what we're probably going to see this year, or at least trend yields. But at the same time, they said after an El Nino, you have a very good chance of a La Nina. And if you look at that, that's about a 70% chance of lower yields in the United States. So that's one thing that probably would get commodity prices up a little bit. But you have to, one thing is that the demand is very large for commodities around the world. We have moved the demand curves to the right, and so that's going to we're not going to see prices go where people think they used to go. They're going to stay fairly well supported because the demand base is good.